Hey everybody, here's a brief tutorial video on how to account for HST uh, in a T account format. So as you can see up top here, we've got 1, 2, 3 transactions. The first transaction is going to be a purchase. So when we're working with HST, there's 3 types of transactions we need to worry about. The first one's a purchase. The second one, which is what the second transaction is a sale. And the third one here is when we remit. Now, remit's that kind of strange word that you've probably seen in the notes on the web page or in class. Remit means, it can mean pay, it can mean we either get or we get a refund back. Okay, so you're just basically remitting, giving your HST information to the government. Okay, whether you get a refund or you get or you owe the government money and you have to pay them some HST depends on the balances of the HST payable and recoverable accounts, which we're going to get to in just a few minutes. So we're going to start with the purchases. Okay, so in number 1 here, okay, we purchased supplies on account for $400. So that doesn't change. We debit supplies for 400 bucks. Okay. Now, normally what we would do, now realize that they brought it on account. So normally what we do is we come over here to accounts payable, okay, and we would credit the amount for 400 bucks. But we can't do that anymore because there's an HST component to it. So since we purchased something, and from now on, I want you to think of this. The moment you hear the word purchase, you think HST recoverable because you could get that money back. Now, I'm going to put the number 52 down as a debit to HST recoverable. You might ask, where'd you get 52 from? All it is 400 times 13%. Okay? That's where I get my 52 bucks from. All right? And that is an amount that we have to recover. And you don't put it in with supplies because it doesn't indicate the value of the supplies purchased. It just indicates the amount of HST. Now, because it was on account, like I said before, in past times, we would just credit accounts payable for 400, but we're not going to do that. We're actually going to credit accounts payable for 452, which is the $400 supplies plus the 52 bucks, okay, of HST. That's the first transaction. That's a purchase. So remember from now on, whenever you hear the word purchase, I want you to think HST recoverable. So with number 2, when we sell something, if you're really paying attention, you're probably saying to yourself, oh, it's probably going to go to HST payable. Well, you would be right because we owe that money. We owe that tax to somebody now. Okay. So in this case, they sold something for $1,000. The customer paid cash. Normally, we would credit revenue for $1,000 in the debit bank for $1,000, but we can't do that this time. It doesn't work in this case because we got an HST payable amount. So what we're going to do is we're going to credit HST payable for 130 bucks. I'm not going to put the calculation up there. Just trust me that 13% of 1,000 is $130. And we credit HST payable because it acts like a liability. We're going to owe that money. Okay, now because the customer paid cash, we debit the bank for $1,130. Plain and simple. Okay, which is the price tag plus the taxes we paid or we charged on the purchase, on the sale, pardon me, or the purchase by the customer. Okay, that's the first 2. Here's the one that gets a little confusing for people, which is the third one, when we remit, because of the way that the question is worded. So here's what's happened. Okay, and I'm going to change my pen color to show you this. HST payable has a balance of $4,000 in it, and HST recoverable has a balance of $3,000 in it. This balance, okay, is not an indication of, or is not a multiple or some kind of strange number that comes out of the 130. What I want you to imagine is that there's been a series of transactions before and after transaction 2, which have accumulated to the balance of $4,000 in the HST payable account. Just the saying goes here in the HST recoverable, we've got a series of transactions before and after which accumulate to the value of $3,000 as a balance in the HST recoverable amount. If you remember from the notes from our discussions, you will remember that a business will remit their taxes to the government every 3 months. So after 3 months, we've got a $3,000 debit to HST recoverable and a $4,000 credit to HST payable. Now, I'm going to make my transaction happen. What I need to do is I need to get rid of those balances from the HST payable and the HST recoverable accounts. So I need to debit HST payable for $4,000, making that a 0 balance account. And then I credit HST recoverable for $3,000. Again, 0 balance. There's nothing left in that account. But what you'll realize is that I've got a $4,000 debit and a $3,000 credit. Well, my debits outweigh my credits. So the extra credit, that $1,000 difference, that has to be a credit somewhere. Well, it happens to go to bank. And if you'll just give me a second, I'll explain why. Realize that we actually owed more than we were going to recover. So if we owed $4,000 and we were going to recover $3,000, we owed the government $1,000, which is what ended up here in the bank as a credit. That's what we paid. Okay, guys, hopefully that was clear. There'll be lots of review coming up, either on the website or through class. All right, if you got any questions, just drop me a line or come and see me, and we'll work through it. Okay, but that's HST in a nutshell. Thanks.